But yeah, we want to build that foundational tool of having the access to capital inside the life insurance, because ultimately that's going to also produce tax-free income for them down the road.
What is the number one secret to beating the tax man?
Well, what we like to do is start with a foundational investment tool, if you will. And what we do is we pack life insurance policies with as much cash value as the companies will let us have. That's our biggest battle every week, is really just getting the companies to let us put in as much as our clients would like to. And then what we do from there is we want to leverage that, and we want to leverage that into other assets, typically income producing assets and tax advantaged assets. This can be real estate, equipment leasing. Back in the day, we were able to do some conservation easements. Those got wiped out this last year. And then you can even leverage within the life. You can just leverage on leverage on leverage. And the whole idea is to build this this bubble, if you will, of growing your money in a tax-free environment, living on tax-free income, and then passing your assets onto your heirs tax-free as well.
Excellent. So it sounds like the number one secret to building, beating the tax man is having a foundational investment tool of which you can then leverage into real estate or other things that are tax advantage, and you can live off tax-free income. Is that a fair summary so far?
Fair summary.
Excellent. Now you mentioned conservation easements being wiped out. What do you mean by that?
Well, last year was the last year you could do them. So we did quite a few of them, but then this year the government, for their wisdom and their great foresight, decided to take them off the table this year.
Excellent. So let's move into secret number two. Once you've figured out the foundational investment tool and you've leveraged and you're getting the tax-free income, what's the next secret to beating the tax man, Dan?
So again, getting into assets that have some opportunity to write off taxes. I'll just, as everybody knows, real estate can be one of those assets when you use leverage on, let's just say, a multifamily project. You've got 150 units. There's some huge depreciation there, and it can not only wipe out the cash flow, the taxable cash flow, I should say, but it can even carry forward for taxes that you may be paying for years to come. So that's a great depreciation asset.
Absolutely. Yeah. Multifamily is a great way to do that with cost segregation and bonus depreciation. And we call that tax flow, right? To offset the cash flow, which is so important as taxes go higher, and your cash flow might be going higher. You want to have an offset on the other side. And so, are you finding those that are your clients, the people that you work with, they're leveraging the life insurance policies to buy the 150 units and doing that cost seg and kind of putting that all together in a picture? How does that look?
Yeah, usually we'll just use the life insurance as the down payment, and then we'll still use bank financing for the majority of it. But yeah, we want to build that foundational tool of having the access to capital inside the life insurance, because ultimately that's going to also produce tax-free income for them down the road.
Excellent. That's fantastic. So, and I'm curious, so now that conservation easements are perhaps out, that you're helping clients with that in the past, or pointing them toward that direction, what are some of the ways that you're helping people with some capital gains tax deferral if and when they do go to exit these assets that have been depreciated with either cost seg or just straight line? What's the strategy there to defer the capital gains tax?
So there's quite a few things that you can do. I like what you brought up early in your show, and obviously I'm very interested to hear more about that. But also charitable trusts that can be used to put those assets inside of those trusts, and then they can defer or ultimately even eliminate the tax. The other thing that we do is use leverage into equipment leasing, using the 179 deduction. That gives you some very, very sizable tax deductions right off the bat. And then those can be carried forward to help offset some capital gains in the future as well.